Good afternoon, everyone. This is Troy Felton with Benchmark Insurance Group, the life and annuity division of Messer Financial. We're happy to be with you here today on the webinar Wednesday, and we've got a special guest, Jim Koth from Columbus Life. The topic of this webinar is going to be surrounding their popular IUL product along with living benefits and the importance of living benefits with life insurance and some of the products that have that available with them with Columbus Life. And Jim's going to break that down for us. One thing I will say is please utilize the chat feature if you have questions throughout the presentation, and we'll set aside some time at the end to go over those. But again, thanks for being with us. And Jim, thanks for being with us in person.
Thank you, Troy. I really appreciate the opportunity to be here today. And for everyone there with Messer Financial and Benchmark Insurance Group, my name is Jim Koth. I'm the Regional VP for Columbus Life Insurance Company. I've been with Columbus Life for 20 years now, and this is my 10th year in the field. And certainly we're excited to be here in person in Charlotte. I recently was given the two states of North and South Carolina, so this is a new relationship, not only for Columbus Life, but for me. And certainly I want to be the difference, if at all possible, in the reason that you do business with Columbus Life. We very much are a small company feel with a big company backing as part of Western Southern Financial Group. And we're excited to share a few specific tools today that we think we can help you as an agency and your clientele. So with that, the two tools that I want to cover today specifically are Index Explore Now, which is really going to open up the opportunity for that rapid issue, simple design for issuing of Index Universal Life Insurance, cutting out things like paramedicals and the need to go through full underwriting. And we'll show how that can fit a group of clientele that we think can help grow your business. In addition to that, we want to go over the power of living benefits with our Life Plus Accelerated Death Benefit Rider. The importance of these riders in all contracts have really been utilized in a lot of sales presentations for all life insurance contracts, but we really feel like our reliable, straightforward approach with this design is something that you're going to feel good about and sharing to your as a producer to your clientele, and then also having them have confidence in utilizing them in the future. It would behoove me to mention our parent company already did once, the Western Southern Financial Group. Columbus Life Insurance Company is part of the Western Southern Financial Group, one of the strongest financial groups in the industry, one of the top 15 carriers in the industry. We're a mutual holding company, A+ AM Best, 96 Comdex score, exceptional financial strength. And what does that really mean? That means that we're in it for the long haul. We just don't produce products so that we can have a great 2025 year. Obviously, I'm in sales and I love to have great production in 2025 and beyond. But we build products for the next 20, 25 years, 30 years down the line. We want your clients to not only understand what they're purchasing, but you to understand what you're selling, and for us to outperform those expectations so that you have a long-lasting relationship with your clientele.
And Jim, if you don't mind, could you share some of the other companies that are part of that group?
Sure. Our sister company is Lafayette Life Insurance Company. They are basically the whole life, arm of Western Southern Financial Group. We also have an Eagle Realty. We also have Touchstone Investments. Integrity is also an annuity company under that umbrella. Okay. Yeah. And I also want to mention, if you're writing Index Universal Life, you're not going to find another carrier that has a higher rating or ranking than us issuing those types of policies. There may be others that are equal, but they're not going to find another carrier that's putting IUL on paper that you can sell with a higher rating than us. Here's our product portfolio. You can see that we just about have everything outside of a whole life product, and that is by design because Lafayette Life handles that side of things. I'll start from the bottom right. We do have fixed annuities. They're all single premium annuities. So if there's interest there, let me know. From a term perspective, we have fully convertible term, which I won't spend too much time on today. Just know that you can always convert our term to anything we currently have or will have in the future in our portfolio. If you're looking for the cheapest term or those online type term carriers, that's not us. But if you're willing to have a client discussion and they're willing to spend a little bit more on a monthly basis for their premium, we'd be a good solution because there's full living benefits as well as, like I said, the conversion privilege to anything we will have in the future. Traditional UL, we have a traditional UL products, which is a current kind of interest and guaranteed interest, and a guaranteed universal life contract. So if there's interest there, we can have other discussions also. But today we want to spend most of our time talking about Index Universal Life. And one of the things I want to mention about Index Universal Life, because I know we have folks that are experienced in selling Index Universal Life, and then also maybe some folks that this is a new product to them and a new concept. And I know that when we came out with our Index Universal Life in 2008, it always is a little bit daunting, even from a sales side, to learn a new product and understand where it fits and how to get producers to understand it's something that is flexible and they can utilize with their clients, and at the same time feel comfortable with it themselves. The way I would describe Index Universal Life is what I like to call IUL is today's cell phone, which we all know we can do way too much with these days. We can do our banking, we can shop, we can probably do anything and everything that we could dream of with our cell phone. In comparison to Grandpa's phone, so IUL is today's cell phone. Grandpa's phone I would describe as traditional life insurance term, whole life. When you think of Grandpa's phone, I think of the rotary phone when you actually dial the number in and it had a 6-foot cord. And that 6-foot cord and that phone made a call. And that's how I would look at uh, previous insurance policies, previous insurance contracts. They were designed for a death benefit need. You paid a premium and it was there when you need it. Today's IUL is much more flexible, much like today's cell phone. You can write it on juveniles. You can write this on folks that are just starting off in their careers and building families, folks like myself are in the middle of their career, and then also pre-retirees and retirees. It is very much a flexible product that can fit the needs of potentially any client. So with that, I kind of went through our entire portfolio in one slide, but I want to specifically talk about our Index Explorer Now product. This is a product that became extremely popular following the pandemic and folks being kind of stuck in their home and still having insurance needs. As we all get used to doing webinars and things of that nature, we all had to kind of pivot as well with our products. And these products became extremely popular because of the ability to have rapid insurance policies underwritten without having to leave the home and go get a paramedical done. It also is a great product for those who are kind of becoming used to that Amazon effect, instant gratification. Those are the products for clients who, potentially want a policy on Wednesday and may change their mind by next Wednesday, right? And so you want to be able to provide a solution for them that you can actually get a policy issued with speed, but that is also still a simplified approach. So our product came out in early 2023. We sat on the sidelines a little bit and watched what some other carriers did as far as these rapid issue products. And really the only thing that we did different than these other carriers is we wanted to make sure that we had a high offer rate on these products. The last thing we wanted to do is to have a product where you would submit an application and then the majority of them get kicked out and you had to write a new app and or they didn't get a policy. The way we went about doing this is basically only offering 4 classes. So instead of having super preferred or preferred, we have non-tobacco plus and non-tobacco, and then a tobacco plus and a tobacco policy. These are normally completed within 3 to 5 days. You get an offer, and right now we're running at about a 70% clip of getting offers on those cases as they come in.
And so just to recap, so the where you guys go for underwriting is probably MIB, prescription drug check, and other big data sources. Is that right?
Correct,
Okay.
exactly like that.
Yeah.
The LexisNexis kind of thought process. It is an electronic process. So basically they complete the application through our electronic iGo app and they do part 1 and part 2. And then once that's completed, it gets immediately sent to our underwriters. And like I said, you could actually do an application today and have an offer by Friday and a policy being emailed out. So normally within a couple of days, that information is reviewed and you're notified whether or not it has made it through the process. The other thing I wanted to mention is that unlike other carriers with this rapid issue product, if for some reason, although we're offering on 70% of these cases, if for some reason a client did get kicked out, whether it's for financials or something that showed up on their pharmaceutical report, they would still have the opportunity to go through underwriting with Columbus Life without having to fill out a new app. So basically, we would notify them, hey, unfortunately, we weren't able to offer one of those 4 classes I mentioned, but would
Mhm.
you like to go ahead and order a paramedical? We'd be happy to continue the underwriting. And we've
Right.
had a good amount of policies being placed that way as well.
Okay. And at that point, it's a matter of the client going to get labs, going to get meet with an examiner, right?
Yeah,
And then
typical
you'll look at
traditional.
that.
Yeah,
Okay.
typ-
Possibly an APS, doctor's records, right?
yeah. If
Okay.
if the face amount
Hmm.
requires an APS, then yeah, that could potentially happen as well.
Okay.
Mhm.
Nice.
So I wanted to mention quickly that we don't want to kind of just get away from completely selling our traditional fully underwritten IUL. We feel like that is still a great product as well. So I just wanted to point out, we have the IUL Now product, but we've had a traditional IUL that, like I said, came out in 2008. That's still a great product. And I wanted to kind of put a slide out there that mentions a little bit as to when you might want to use IUL Now versus a fully underwritten Index Explorer Plus product. And essentially, if it's that convenience buyer, a client who's looking for a fast process, an easy application, maybe they don't want to, be pricked by a needle, or they want a policy quick, and they're okay with getting a non-tobacco plus or non-tobacco offer, then I would certainly let you know that Index Explorer Now is a good solution. That product was specifically built on the same chassis as our fully underwritten IUL. So you're not really losing anything other than those two classes. Obviously, there potentially could be a rider or two that aren't available, but knowing that that product, the rapid issue product, is built on the same chassis as our fully underwritten product means it's going to perform the same way. If you have clients who have larger face amounts that fit outside of the IUL Now criteria, or they are potentially a preferred or super preferred and willing to go through the underwriting, obviously it would make sense to also do that product as well. So there at the bottom, I wanted to mention Now is available for clients ages 18 to 50. Our rapid issue product is available 18 to 50 for a minimum face amount of 25,000 and up to a million. And for older clients age 51 to 60, it is available for 25,000 up to 250,000. So one of the things I wanted to discuss today is, thinking about a shift in expectations from a client's perspective. I mentioned a little bit, after COVID, a lot of things changed for all of us, especially in this business and the type of products clients were looking for, the access to those types of products. And we really needed to focus on customizing these products to those clients' needs. When you think of what clients are looking for today, they're looking for speed. They're still looking for simplicity, but they also want security, and knowing what they're buying is still a top-notch product. And so we had to pivot and customize these types of products, knowing that there's a digital experience that's out there in the insurance industry today that differs from what it was even 10 years ago. People are able to look up Columbus Life on Facebook and LinkedIn and really do a lot of research on their end as well. So we wanted to know that, wanted you to know that we take all those things in consideration in adding products like this to our portfolio. And I really think it's important to keep in mind that these type of products can really fit a specific area in your clientele portfolio, or portfolio of clients. I was thinking in putting this presentation together about, I will be 49 here in a couple of weeks, so I'm not quite a millennial, which is good, I would say, for myself. But there are quite a bit of folks in that millennial age group and the Gen Z age group that are potentially going to be looking to buy products like this. And so understanding that client perception, understanding, you know, their view on things. I would think that, someone who's even a Gen Z, or who's maybe in their early 20s, their view on financials and life insurance is completely different today than maybe when I was in my early 20s. I think they have a lot more information available to them, and so they're probably thinking about things more than even I did in my early 20s, and financial planning and tax efficiency of growth. When you think of millennials, a lot of those folks are well into their career now and building families. Those folks are looking at, creating an income stream for themselves in retirement, protecting their children while they're under their roof. And some of these things I have on the screen, I think it's important to know that when you have these conversations for clients, they understand that it's probably not as expensive as they think it is. I think that's probably a big hurdle for a lot of folks. But at the same time, you want them to understand that locking in that insurability while they're younger, most of the cost of a policy is tied to their age, right? And their health at that time. So if, I was particularly healthier in my 20s than I am in my late 40s, and that's probably the case for most of us. So if you can make them see that accessing a policy like IUL now in their younger ages could be beneficial for them down the line. Protection. A lot of us have life insurance contracts through their employer. I know that I have an employee life insurance contract through Western Southern Financial Group. However, if for some reason I were to lose my job or something changes, it's important for clients to understand that that's not always going to be there, and they should have their own planning outside of that. And then also securing your future, letting them understand that these products really can not only take care of their family if something were to happen, someone's uncertain catastrophe were to happen to them and there'd be a death benefit. There also is the ability to create accumulation that they can pull from. There's the ability to build wealth. So this is really a policy that you want to focus on for your clients. That's a lifelong policy, and the flexibility of it can fit the life of the client.
Yeah, I like your analogy of the cell phone with as it pertains to an IUL policy, because sometimes when people think about IULs, the focus is all on, okay, how much cash value can I accumulate? Which is great. You do want to accumulate cash value, but at the end of the day, it's a life insurance policy. So it's not just about the cash value. That's one important component. It's also the death benefit. It's the living benefits that we're going to talk about here in a while. Just great flexibility, and it's not something that's an alternative to where you might be, quote, investing elsewhere. It's something that's a supplement to that, and that will give you more options, more flexibility, just like a cell phone. I like that.
Thank you.
Yeah.
So I wanted to share a quick example. This is actually a real client example from a client in Alabama. I think this policy was written about 7 years ago. And this is a gentleman named Ben. He was 36 at the time. He received preferred underwriting. And essentially, he has 2 young children at the time. I think he had 2 girls under the age of 3. And I wanted to show you how this was actually written on an Index Universal Life contract some 7 years ago. But I converted the numbers, because using the same premium and everything, to an IUL now to show you what a today scenario for Ben would look like utilizing the rapid issue product. And so what Ben was looking for was not only a death benefit to help subsidize if something terrible was to happen to him while he had a young family, but also something that could help potentially grow some income stream with, have access to living benefits, and then as he grew his family and grew in his career, have the ability to also maybe pull from this policy from a cash value perspective. And this is what we would typically call a minimum or min-max scenario, where you max fund a minimum death benefit. And so this is a 20-year scenario where you have a client who's 36, not a 20-year, you have a client who's 36 and he's planning to pay 29 years to his age 65. And he was looking at paying $6,000 a year to age 65. We searched for a minimum non-MEC death benefit, and that basically purchased a minimum death benefit at his age 36 of $117,000. Our current illustration rate on the IUL now is 6.68%. And basically, we paid that premium all the way up to his age 65 for 29 years. As you can see in the bottom right-hand corner, that accumulates to $174,000 in premium. But also, by the time we get to age 65, some 29 years down the line, that cash value has grown to $469,000. And he could pull a 20-year income stream from his retirement age of age 65 to age 85 of just over $46,000 a year. Again, I went to the University of Cincinnati, and it was a great school. And even with a degree I received from there, I can do that calculation. And that's just shy of $1 million in income stream over a 20-year period.
After putting in 174,000.
Correct.
And another great part of this, and this is where I would encourage everyone to utilize Benchmark as a resource, is for help in designing some of these illustrations. But another great part of that is the tax advantages of when you take some of that money out. If you do it properly in the form of loans, it can be a tax-free situation when it comes out.
Correct. Yeah. So essentially, the loan, when you take it out is a loan against the death benefit, and obviously the death benefit and the value will be reduced. But it is, since it's a loan, that income comes out tax efficiently and tax free to the client. And this is a scenario, same scenario with Ben. There's just a couple pinpoints I wanted to mention. Um, I have a boy-girl twins. They recently turned 16 last week, and what I can remember about them when I brought them home was two things. I have a boy-girl twin. That's pretty cool, right? Uh, and then secondly, I have two kids that are going to be wanting to go to college at the same time. We're going to be wanting to have a car at the same time. And so, we got the car thing taken care of. I think they're going to get their license sometime this summer. But at the same time, when I brought them home and set them down in our house for the first time, we came home from the hospital, I immediately thought of 529, right? Indiana, the state of Indiana where I live, has a really good 529 plan, and we've contributed to that. But I also thought of life insurance, because life insurance is a way that you can utilize accumulation, even if it's written on my life, for their college funding. Because when you go to do financial aid, they're not going to know what accumulation you have in a life insurance contract. So you could also use a policy like this. And that was important to Ben, I know. We show here, you can see there in the green on the left, the flexibility. 16 years down the line, if at his age 52, he wanted to access some cash value for college funding or whatever it is at that time as his kids enter those ages of graduating high school, he's got almost 150,000 in cash in this policy. If he doesn't do that, that's fine. Over on the right, it goes back into the blue where we were looking at that 469 again in cash value at 65, and that $46,000 in income stream from age 65 to 85. Over on the right, that $117,000 face amount has grown to just under $600,000 policy. So now at his age 65, he's got a death benefit of 500, and I believe that says 586 available if something were to happen to him that will be passed on tax efficiently to his heirs. The bottom right is one thing that I'd like to consider as we all think about retirement, as we get to age 62, 65, and some of us may never retire. There's going to be different options for us to utilize income that we have, either whether it's in IRAs or other investments or Social Security. And if those things and other savings, if those things are enough to kind of float us for a few more years, the power of this policy and letting it marinate really has a dramatic difference in the income stream. And so that $46,000, if they were to wait 5 more years to take that income and now started at 70 and take it from age 70 to 90, has turned into $63,000 a year. And again, that you're talking about over $1.2 million in income in retirement. So.
And that's the power of compounding interest, which is what Einstein said is one of the biggest wonders.
Yes,
right?
absolutely, absolutely. Any questions from the chat on the product or anything specific?
There was what amount is considered a large face amount? That was back.
Okay. So I would, for us, I would think any face amount $1 million or more, typically. I mean, so on our IUL now, you can issue up to $1 million for those ages that I mentioned, 21 to 50. We have an average policy for anywhere between $500,000 to $750,000 in a lot of our clientele. So when we talk large face amount, a lot of times that means when you get beyond $1 million, there's going to be maybe some extensive underwriting, additional underwriting, more information needed on the client's financials, things of that nature. So one of the things I think that differentiates Columbus Life is we really not only want to bring a product to you that you can feel proud about and feel comfortable with and selling to your clients, but we want you to also feel comfortable about building a book of business. And so you can build a book of business with this product and create a good roll out of bed income. Not only do we have really good target premiums as far as commissions on these policies, but you can continue to roll those targets. Let's say you sell a nice size IUL, and the target premium is $20,000 on that case, but the client's premium is only $6,000. You may need 2 or 3 years of that premium to roll to pay you completely on what you're owed as far as commissions. So we have unlimited rolling targets. We pay on excess up to year 12. The thing that I will say that really kind of makes us stand out is that we pay a small trail on every piece of business, and that's a lifelong trail. And so as you sell a good amount of these IUL policies, just know as those policies stay in force, you're going to get a trail on each time they pay premium. for the life of your industry, selling insurance, whether it's with Columbus Life or other carriers, as long as that policy is in force after you retire, that trail is going to continue to be paid.
And that's something that's a differentiator between Columbus and other IUL carriers. Is that correct?
Correct.
Yeah.
And especially with the beneficiary option.
Mhm.
And so, as I mentioned, as you retire and they continue to pay premiums, the trail continue to go to you as a producer. But if and when you were to pass away, you designate a beneficiary as well. And as that policy stays in force, the beneficiary will also receive that trail. And that trail is on the unloaned account value. So on an IUL, any value that hasn't been loaned out already is what that trail percentage is on. So we wanted you to know, selling these policies and keeping them in force can create a nice supplemental retirement or roll out of bed income for you as well. This is a quick example. This is a real marketing piece you can see on the right of a client that was contracted with us from the years 2007 until 2022, essentially a 15-year career with Columbus Life. He didn't write a ton of business with Columbus Life. He wrote on average 3.5 to 4 policies a year, which is fine. He was a financial planner, did a lot of money managing, and then wrote life insurance pretty much on the side. But he wrote three or four nice size IUL cases a year. The average target premium on those cases was just over 15,000. And by the time he retired some 15 years later, he had still had 62 policies that were still in force with Columbus Life. So in 2022, 62 policies were still in force. He received a trail commission on that block of business that paid him $10,000 in 2023. So whether it's a nice trip somewhere with your family, you need to put a roof on your house, or you just have discretionary income, he earned $10,000 in retirement on that block of business with the trail.
And one thing I'll point out, just as a follow-up to that, is this is obviously an example of very high income clients purchasing a policy like this. But to your point earlier, the you go down to a minimum death benefit of 25,000. So like even if you have clients that can put in smaller amounts, then it still could be a very beneficial thing for them on a long-term basis.
Certainly, and then typically people who write the smaller face amount business, it's easier to underwrite, it's easier to get through. You can write a lot of those with IUL now. You're also probably going to write quite a bit more than 3.5 policies a year. So you might write 30 policies in a year, and you're going to be getting a trail on each of those 30 policies. So still the same story, just kind of calculated in a different way. Yeah. And so from the time of 2007 to 2023, this retired agent Carl basically received over 135,000 in trail commissions. And when he passes away, he can use it as a retirement supplement, but when he passes away, those trail commissions will continue to go to his beneficiaries. So if you're looking for a carrier who's looking to build a long life relationship with you and your clients, please look for Columbus Life and know that you have a good opportunity for a nice roll out of bed income in retirement as well. So the second part I want to discuss, and I think is as important as anything in a lot of these sales discussion, is the power of living benefits. And what specifically are living benefits? Obviously, life insurance need is the initial need for a death benefit, but more and more each day, the conversation goes to what else does this policy include? What are the benefits that potentially I can access while I'm living? And living benefits are, no matter what policy you get from Columbus Life or other carriers, are essentially the way to access the death benefit as an accelerated death benefit to supplement for illnesses and things of that nature. And typically those are also tax-free, much like the loan for income. These accelerated benefits are built into the contract so that you can access them while you're living tax efficiently. What they are not, I will say, is a complete replacement of any kind of long-term care insurance or health insurance. I wouldn't think of these riders as a way to not utilize long-term care insurance or health insurance, but as we know, those things are variable and they're very expensive. And so to know that this type of rider is built into a life insurance contract as well to help kind of circumvent some of that need is really a good feature. So when we talk about living benefits, we're thinking about longevity. These longevity dates or ages are from. I think 2023. I looked at them earlier this week, and for women, it's right around expected uh, life expectancy around 80, and for men, it's just over 74, and as an average, you're looking at 77 and a half. And this really hit home for me. I have two aging parents who are thankfully still together, living together in the home I grew up in, but they'll both be 79 this year, and they have some mobility issues. They have some health issues that are starting to pile up on both of them. And so I really think both of them actually have life insurance contracts with Columbus Life that I wrote on them in their early 60s. So they have these living benefits, but it's something that we all are eventually going to go through. Whether you're dealing with it as you are in your 70s as a direct relationship with your spouse, or you're the children or the family of those folks, I think recognizing this is something that's inevitable for all of us, and utilizing these type of benefits within their contracts is something we all need to consider in the sales process. And I'll just go ahead and read from this screen. 70% of clients, male or female, over age 65, they will need a long-term care facility. And most of the time it's men, and they're in that long-term care facility for 2.2 years. 70% of those folks that are in a assisted living facility, excuse me, are women. And so that again speaks to men are typically in the assisted living for 2.2 years, and women are typically in these facilities just shy of 4. And like I said, as I think of my aging parents, I'm thankful that they're there together. But ultimately, there may be a time, and you all have folks that are aging in your families, where maybe one of them might be on their own. And that's really where what some of these benefits are going to need to be utilized, and have access to. Maybe having those in a life insurance contract can help circumvent the financial burden on the family. So what are those costs to consider? I had an aunt that recently passed, and she was in an assisted living facility for just under 8 years. And she started out in an assisted living facility, just had a kind of an apartment set up. She still was able to do most things, and that still was a very expensive um, type of care in a living situation. I think she was paying $5,000 or $6,000 a month to live in this assisted living facility. And then as things progressed with her health, and she got to the point where she needed nursing, now you're talking about $9,000 or $10,000 a month. That quickly can chew up, the retirement funds that she had, anything that she may have had from a spouse. Medicare does not pay for these long-term care needs, and you're talking about potentially $100,000 for assisted living, and then that much, if not more, when they need actual nursing care. So the burden of cost on even someone who is prudently saving and preparing for these types of things, for retirement, things of that nature, can quickly be taken away if they need this kind of care as they age. And again, I kind of mentioned it. It's just not about the insured. 70% of the U.S. population is going to be taking care, or the caregiver for someone over the age 50 in their lifetime. And as I think about, again, my parents, I spend a lot of time with them now, just checking on them, helping them around the house, and it can become a full-time job. You can see there, on average, someone spends 37.4 hours caregiving for a loved one in these situations. So what I want to mention is the specifics to Columbus Life Accelerated Death Benefit Rider, and how you could utilize this rider in a straightforward approach, so that you understand, your client understands. There's never going to be any question on what's going to be available to them. And certainly we have some examples that show and speak to real life scenarios, and how our payout worked to help their situation from a living benefits perspective. So what are the 4 reasons for utilizing Columbus Life Accelerated Death Benefit Rider? Simple calculation: whether you sell it to a 25-year-old or 65-year-old, the benefits that are available to be paid out are going to be known up front. Basically, this is underwritten up front, and if they get the full rider, nothing changes. Accumulation in an IUL could increase the benefit, but you're going to know from the time you purchase it what's available, and there aren't going to be questions later whether it's being re-underwritten or discounted like you get with other carriers. We do fully illustrate this in our software. And even if you were to fully utilize the benefits in the policy, in other words, you had a chronic illness, they've had a terminal illness, and they've used these benefits to the maximum, there's still always going to be a $10,000 death benefit paid out to their heirs. So essentially, a final expense policy still at the end of the policy. One of the things I want to mention is there are many different ways you can utilize these riders and designs in the industry. We use the lean method. It's a no-cost rider that sits on all of our products. And basically, when you qualify for one of the 3 triggers that I'll go over here in a minute, whatever amount is available to you is a lien against the death benefit that keeps it from being any kind of tax implications to the client or their heirs at death. But as I mentioned, if there's $100,000 available when they write the policy at age 30, there's going to be that, then some when they need it. A lot of other carriers use what's called a discounted death benefit. And what a discounted death benefit is just a calculation within the policy that basically says, even though you were 25 and you bought this policy, when you're 60 and unfortunately had a stroke and need these benefits, we're going to look at it again, right? Or we're going to re-underwrite. And over on the right, there is a calculation that are in policies like this that shows, hey, this is the calculation you got to figure out as a producer to determine what my client can expect.
It looks like Chinese or something.
Yeah. And then over on the left is an example of a 35-year-old who at age 70 needed his living benefits. It was a $100,000 policy. He became chronically ill, and with Columbus Life, I'm having a hard time seeing those numbers, but you can see potentially at 100,000, there's 58,000, 35,000 in cash. Okay, 58,000. Okay, so they can accelerate basically 60%, just shy of 60% for chronic illness, and still have a remaining death benefit to their heirs of 38,000. Where with another carrier in the industry who has a discounted death benefit, they too were able to get just around 58,000 for a chronic illness benefit. But unfortunately, there was no death benefit left to be passed on to their heirs. So again, upfront, but also we want to still take care of the heirs, even though the occurrence happens. So
one thing that I'll point out, you'll see American National. That is, some of you may have seen in the news recently that they're pulling their life products. Part of that is a strategic move to focus more on what they deem to be the more profitable products like annuities. But yeah, it is interesting that that's the carrier that's being compared to. Yep. And I think that just speaks to the importance of utilizing a carrier has a long track record of being financially stable, being stable in terms of the products that how they perform, the indexed UL products. That's one of the reasons Benchmark brought on Columbus about just under a year ago. Is we saw a track record that we learned from our industry peers of them have really good integrity on their IUL products with maintaining good cap rates, and also just very competitive GUL. We haven't talked about GUL, but maybe I'll get to that at the very end because I do want to give a little plug for that.
Thank you. I'm happy to discuss that further. You mentioned the design of our product, and I went over that a little bit, but these products are out there, and there are a lot of variations of these products, and there are a lot of technical aspects within the contract that carriers can or cannot utilize to increase expenses or make an illustration look better than one or the other. And I just wanted you to know, we do not play in those games. We want to have a policy that's just easy to understand, have up-to-date features, but most importantly, we outperform that illustration. We want you to have great annual reviews. We don't want you to have annual reviews that you have to answer questions to. Well, hey, this really isn't what I thought I purchased. We want you to have a long-time relationship with this client and have a policy you can feel, at the end of the day, your client, they buy a policy, not an illustration. So we want you to have a good relationship with Columbus Life. And our ideology behind product is that it's something that you can rely on and that we outperform throughout the life of the contract. I mentioned this earlier, our accelerated death benefit rider is available on all of our products. Does provide a portion of the death benefit while the insured is still living. and still remains a death benefit to the beneficiaries even after they utilize. I should have utilized my stronger glasses today to read some of these things, but I can kind of just go off the cuff. These are the three triggers: the terminal illness benefit, the chronic illness benefit, and specified medical, which is our critical illness benefit. Terminal illness is basically someone who's diagnosed with expected death within 12 months. If that occurs, then they can apply for the terminal illness uh, trigger for that rider. Chronic illness is basically someone who can no longer do 2 of 6 ADLs or activities of daily living. They're listed there: eating, bathing, dressing,
Toileting,
toileting.
transferring,
Thank you.
and continence.
Thank you. So you can see someone's eyesight's better than mine. And then that is 40% benefit up to 250,000. But again, if they can't do those 2 of those 6, they get for 90 days, then they can apply for that benefit. And then specified medical, there are actually 13 different occurrences that are available. And basically, this is if you have a threatening or non-life threatening cancer, or you had a stroke or renal failure, or some of those things that are listed there, and you just needed some funds to access, whether it's for travel or just to kind of help pay for things. There are some occurrences there that you can access funds as well. So you can access all 3 of those triggers I just mentioned through a lump sum payment. For the terminal illness, which is that expected death within a year, you can get 60% up to 250,000 in of the face amount towards terminal illness. For specified medical condition, that's the renal failure, the non-life threatening cancer or stroke, you can get 10% up to 25,000 as a lump sum. And I'll go through some examples, some real life examples to show you how this rider works. From a chronic illness perspective, which I would say of the 3 things that we mentioned, 3 triggers that we mentioned, chronic illness is the one that we see used most often than not. Lump sum, you can get 40% up to 250,000 against the death benefit for this rider. And again, keep in mind, this rider sits on the policy as a no-cost rider. When you need it, you apply for it. There's a small interest charge that basically is taken off of the top of the payment that's sent out, and I'll show you an example later. But again, it's not a rider that you're being charged for. It's this just sitting on the policy until you need it.
So that 40%, is that a one-time lump sum payment to that client? Because
Right.
a lot of other carriers might pay it on a monthly basis for 12 months, and then the person has to get re-qualified to continue receiving some of those chronic illness
Right.
benefits.
Yeah, that's correct.
So
And
40%, that's pretty good. Yeah.
so lump sum is 40%, but
Mhm.
to your point, Troy, if you're chronically ill, you probably need to have access to the funds more often than just one payment.
Mhm.
And so to that point, we actually have a periodic payment option, which is what's shown there below. And that is if you're willing to take the payment out instead of a lump sum from 3 to 10 years, you can actually access more of the
Okay.
death benefit at a higher percentage. So if you can spread the payment out over 3 to 10 years, you can get 50% instead of 40 of the death benefit, up to $1 million instead of 250. So, and honestly, we see people utilize that more often than not.
Right. Makes sense.
You can't see this from an illustrated perspective. In an illustration, there's a single report that's added to the end of the illustration. This is probably hard for most of you to read, but basically just know there's a 2-page report at the end of each illustration that if you wanted to look at in any given year, let's say at age 75, what if I had a terminal illness diagnosis or for some reason needed to access the chronic illness benefit? It'll show you in that given year what the benefit would be and then what the residual leftover death benefit would be to the heirs from a lump sum perspective. But I think the most important piece to this rider from a presentation perspective in our illustration is the first 3 pages of every illustration has something that looks to this effect that is catered to your client specifically. It's going to mention obviously the death benefit that's available, but it's also going to talk about different intervals on a 5-year basis of what cash accumulation is available. And then also over there in orange, in different 5-year intervals, what living benefits would be available to them. So it's going to give them an explanation of the benefit in a color format. So if you're a more analytical client, you might want to use the previous slide. For most clients, I think these first 3 pages will be a good representation of what the rider offers.
And one thing I would say is if you're new to writing universal life, maybe new to writing indexed universal life, is utilize either Benchmark as a resource to help you run this. You'd call us and give us some of the details of that client, some of the details of their health, what they might be able to afford to put into a policy like this. We can help you with that case design. Also, one thing I really like about Columbus is they welcome people to call them, some of their sales support desk. And there's one of the things that Ward pointed out in our last webinar that we did is most of the employees are in one place in Cincinnati, and you can call up and you can get an answer from someone on that sales support staff. And we've utilized even some of that ourselves and had good results with
Well, good. That's good to hear.
that.
And one of the things that we hear quite often is when I get on a webinar, I'll put on a two coat. A lot of people don't see that anymore. And then also, most of what is Columbus Life outside of the exterior salespeople like myself is all located in Cincinnati. So you're talking about the sales team, the senior vice presidents, our executive staff, our new business and underwriting team, our advanced markets. Everyone is in one location. What does that mean? I mean, it's somewhat of a unicorn in the industry today to know that when you call Columbus Life, you're calling the same location. You're calling Cincinnati, Ohio. Your internal wholesaler, your advanced markets, they're seeing each other on a daily basis, and they're able to have discussions that maybe other carriers' home offices are not able to have because they're in different locations. And I think provide a unique set of service opportunity for you as a producer, in addition to what I can offer out in the field. Our home office, I think, can give you much more attention on a daily basis to your business. So certainly, if Alzheimer's were to lead into them not being able to do 2 of the 6 activities of daily living, then yes, it could be considered a chronic illness. And then ultimately also, if they get to the point where they're expected death in a year, they could utilize that for a terminal illness. So I want to give you some real life examples. I mean, these riders are great to talk about, but let's where the rubber meets the road is how have these actually worked for real clients with Columbus Life in the field and for their producers and their clients. And so this is an example of a $500,000 policy that was written on a 44-year-old female back in 2017. And unfortunately, just short six plus years later, she was diagnosed with a chronic illness. And from an illustrative perspective, the illustration that she had and that her producer presented to her back in 2017 showed a lump sum availability for chronic illness of $192,150. And when she basically accessed this benefit in August of 2023, the benefit was $198,000. So again, to the point where we actually would like to outperform the expectation, she was able to access $6,000 more for chronic illness benefits. When you're in an accumulation vehicle or accumulation product like IUL, you have access to the accumulation be a part of the benefits as well. So this is a real life example where we outperformed the expectation of a client. The next is a 64-year-old male who was diagnosed with cancer 6 years later. Again, max lump sum illustrated of just shy of $220,000, and this was a $20,000 difference. When he went to access chronic illness benefit in 2023, his benefit that he was given on a lump sum basis was $240,000. A couple other examples. This is a lady named Grace. She bought our traditional full underwritten IUL back in 2018. It was a $250,000 face amount. And in 2022, she was diagnosed with stage 3 cancer. She filed a claim in 2022, and we paid her claim just less than a month later under the specified medical condition because she was given a cancer diagnosis. She wasn't quite terminally ill or chronically ill at that point, but she utilized $26,000 of the specified medical to actually help her travel for additional treatments for her care. Terminal illness, this is an example. Marcus, he purchased one of our GUL, which is our Voyager product, which is a guaranteed universal life contract in 2018. It was a $100,000 face amount. Unfortunately, he was diagnosed with terminal cancer in 2023, and he applied for the benefit, as you can see, in August, and we paid 3 days later. So again, we want you to know that if they qualify, this isn't a long process. You have access to the benefits. And he took an advance of $57,000. Again, speaking to that 60%, $57,000 benefit towards his terminal illness care before he passed. And again, this is on our term policy, $150,000 face amount, 20-year term that was written in 14. Phyllis basically passed away. She was able to access $86,000 of the 150 for her terminal illness benefit. And when she passed away, her heirs still received $64,000 as a death benefit with the terminal illness benefit. So again, we really think that the living benefits should be a big part of your conversation, but know that there are different variances of these riders out there, and that with Columbus Life, once it is underwritten, when the policy is originally issued, it's never going to be re-underwritten. It's never going to be discounted. The client's going to know what's accessible to them as far as benefits. If it's in an accumulation product, it could potentially be more than they expect. And we certainly would love to help you utilize that part or that rider of the sale of a life insurance contract into your discussion.
Thank you, Jim. Jacob, do we have some, we're going to pivot right now to if there's any questions.
Yes, we do. We have translated materials not only on Columbus Life as a company, but the living benefit rider specifically, and spec sheets for any product that we have in our portfolio.
And there's other languages out there too.
Yeah, we have multiple, Asian, Spanish, we have Asian, we have Hmong, and there's some other materials. So just reach out to me or our home office team if there's specific translated materials that you need, and we'll get those out to you.
Awesome.
Thank
Well,
you.
thank you so much, Jim, for being with us, and especially being with us in person. I know the first time we did this, we had a little bit of technical stuff going on, but we definitely appreciate your time, and just so our attendees can get a picture of who Columbus is and what the values are and all that. And we appreciate just your support and your willingness to help, and we look forward to being successful together.
No, thank you, Troy. We certainly would love to be a part of your business, and if I can be the difference, if I can be what you're not getting from other carriers, I'm certainly willing to participate in case design as in a combination with what we have at the home office to help support your business, help grow your business, and make Columbus Life part of your business on a daily basis. So thank you for your time, and we appreciate you, Troy. Thank you for Messer Financial and Benchmark as well.
Thank you. Everyone have a great day.
Thank you.